Well, hello and welcome to Business Incorporated Live on Channels Television. Well, the first full trading week of October right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. And Zimbabwean government set to pay civil servants in US dollars as the ZIG weakens. The Central Bank of Egypt announced the issuance of 2 billion Egyptian pounds worth of floating rate notes, treasury bonds. And Kenya's Forex reserve rises, the shilling stabilizes amid high investor confidence. Hello, welcome to the program. I'm Ladi Williams. Let's get a check on the markets now. Most of the commodity markets we track, starting with metals. You see prices fell after a stronger than expected U.S. jobs report. That boosted the dollar and caused analysts to scale back expectations of an aggressive rate cut from the Federal Reserve next month. We see spot gold was down about 0.3% and at $2,647 per ounce after scaling a record high of about $2,685.42 last week. U.S. gold futures lost about 0.5% to $2,666. U.S. job growth accelerated in September, and the unemployment rate slipped to 4.1%, further reducing pressure on the Fed to deliver another 50 basis point rate cut at its November 6 to 7 policy meeting. So I guess investors now, it's fingers crossed. I guess the jobs market looking good, so I might not expect an aggressive 50 basis point hike for the U.S. interest rate. To the oil market now, see oil prices, the pairing gains in early trade today after charting their biggest weekly rise in over a year. That was on Friday amid mounting threats of a region-wide war in the Middle East. Brent crude futures fell about 43 cents, about 0.5% to $77.62 per barrel. And U.S. WTI, that's West Texas Intermediate crude futures, that slipped 35 cents, about 0.5% to $74.03, about 18 cents a barrel. Last week, the Brent contract, that gained 8% on a weekly basis, and that's the most in a week. That's in a week, that kind of gain. Last time we saw that was January 2023, while WTI contract gained 9.1% week on week. That's the most since March 2023. And there are reports that Dangote refinery may open the market for other petroleum marketers to buy petrol directly from the refinery. One of the implications of this would be that the Nigerian National Petroleum Company Limited will cease its exclusive purchase arrangement with Dangote Refinery, providing room for marketers to negotiate prices with Dangote on a willing buyer, willing seller basis. This transition aligns with Nigeria's current market practices for fully deregulated products like diesel, aviation fuel, and kerosene, which are already open to direct sales. Dangote Refinery, with a 650,000 barrels per day capacity, began producing petrol in September. Initially, Dangote's Vice President, Devakuma Edwin, noted that the NNPC would be the exclusive buyer. However, recent statements from the NNPC clarified that the refinery is free to sell to any interested marketer, removing its previous single off-taker stance. Now, let's look at Nigeria's telecom sector. We see operators in Nigeria have lamented the impact of currency devaluation and inflation on their operations, requesting tariffs increase. But let's look at this and 5G adoption so far in Nigeria. Join us for this conversation. We have Oluwole Begunde, is a research director at Insights, joining me right here in the studios. Great to have you.
Thank you for having me, Ladi.
So we see the same issues, at this point: currency devaluation, inflation, and we've seen operators in Nigeria, that's telecom operators, say, you know what, it's time for us to increase tariffs. And we've also heard from the government saying it's not always about increasing tariffs. We can find other ways, to make this work. Because at the end of the day, we don't know how much the Nigerian consumer can take. We've seen price rises on very sensitive commodities that, you know, on a normal day would, you know, send people, you know, to the streets, and we've seen that happen. So, you know, talk to me about the third quarter. We're expecting, you know, the telecom's contribution to GDP for the third quarter. We're going to have that at some point. But we know Q2 wasn't looking so good. So how are you seeing, you know, this previous half of the year for the telecom sector?
So it depends on who you're talking to.
Right.
Like you said, the operators have challenges with Forex,
right,
which is impacting how they can invest into the market. Now, that is a big deal because most, MTN, for example, and Airtel are global companies and they report their revenue in Forex. So whatever they're making locally has an impact on what they're doing at the group level. Let me give you an example. Q1 2023, MTN Nigeria, between Q1 2023 and 2024, Q1, had a 31% growth in revenue, local currency. Now, at the same period, Q1 2023, Q1 2024, the South African OPCO had a 3% margin growth. But when group results come out, MTN Nigeria's revenue nosedive 52% because of that Forex gap. And that now impacts investment issues about Nigeria and the likes. So that is a problem. Although locally they are doing so well, 31% growth, it's impacting revenues at the group level. What that means is that South Africa has now become the largest contributor for MTN Group in Africa, ahead of Nigeria. Nigeria used to be there for a long, long time, but been leapfrogged down because of the Forex issues. So that is a big problem. And like I said, I predict that if things don't change, the Forex dynamics don't change in favor of the country generally, you will see global companies like MTN start to pull out a bit because nobody wants to put in $1 in the market and withdraw 50 cents. Doesn't make business sense. And what that would happen for the market is that we start to see quality of service declining because they can't really invest what they need to invest in the market to sustain the services that are around in the market now. We're seeing 4G across the country, not just in Abuja, Lagos, Port Harcourt, all across the cities. 5G also growing. All of that kind of investment will not happen anymore if they don't have the right investments coming in from outside the country.
Because, you know, looking at this FX issue, it seems that is the root of all our problems.
Absolutely.
At this point, looking from, you know, sector to sector, and we know the telecom sector is a very, very sensitive sector.
Yes.
We need that because if we don't have that sector,
there are a whole industry
a lot will be impacted
on telecoms.
Right.
The betting industry, for example, is a billion-dollar industry resting on telecoms. The fintech industry, sitting on telecoms. The banking on telecoms. So that sector needs to be protected. What I reckon will happen will be a meeting between the stakeholders, the telcos, the regulators, the government, consumer protection, to find when tariff can go up. It's not an if.
So the tariffs really have to go up.
They have to go up. Because look at the banking sector, for example, the aviation sector, oil and gas. Everybody has adjusted in a way the Forex prices, except for the telcos who are still being told to pipe things down a little. And if that doesn't affect their revenue going forward, it will be difficult to tell group to invest in local. Because now, although you're making a lot of money locally, when it gets to group level, that impact is not seen. What happened to MTN Nigeria cost the group, MTN Group, a lot of money. Because for the first time, they recorded half year this year, over $500 million loss. $500 million loss before tax. That is huge. So that trend cannot be allowed to continue. And again, because of the import of telecom sector in this country, we cannot afford to have foreign investment cease because of the nosedive of the Naira. So there has to be something has to give.
We've seen some of the local operators actually shift from, you know, dollar-denominated debt, you know, trying to move it to, you know, local currency. That should, you know, help somewhat.
It will help. The challenge is a lot of our technology is imported. That's the challenge. So software is being paid for in foreign currency. The radios, the antennas, the data centers, the servers, all are being paid for in foreign currency. So when you get local debt, how does that support you when a major part of infrastructure is still being imported? That is the challenge. Dangote, for example, helps because now petrol is local, right? But software is not local. So unless we have a thriving local tech ecosystem that can support these telcos, that might not be the solution.
Are we moving in that direction at all?
Gradually,
we have homegrown software?
Gradually. We're going there. Recently, I think Sterling Bank was the first bank in the country that moved its core banking system to the local system by a local provider, local entity in Nigeria. So we're seeing that gradual shift, because if the dollar continues at this rate, a lot of things will be impacted, not just telecoms, a lot of sectors. So we have to start thinking how we can have capacity locally to build our technology like India, like China, not just depend on what the US is doing or the UK are doing. So that is something that has to be, it's inevitable, has to happen.
Right. And talking about, homegrown technology at this point, we did have that issue, last week, one of the top banks, the app, it wasn't working for a lot of its customers. We were seeing complaints all over, social media. So we're seeing that impact, when it comes to, tech, in the country, and, having some of our talents, actually leaving the country, due to the Jaguar syndrome. We're seeing that really impacting, when it comes to most of these apps. Now, a lot of people rely, on this banking app. So how are you seeing the situation so far? I know you did comment on it.
Yes. I think Zenith Bank's problem was largely project management, my opinion, project management. They wanted to move core applications from one provider to another, and that takes a process. A lot of things have to go involved, because you don't want to have a bank account owner who used to have 1 billion naira, then you moved him and the next day is owning 5,000 naira. That is a problem. You don't want to have somebody owning 5,000 naira and after migrating has $5,000. That kind of thing needs to be managed properly, and it takes a while. Human is involved, technology is involved, connectivity is involved. So I think, my opinion, they didn't manage it properly to make that shift. But all in all, I believe that talent is growing in the country in that tech space. This generation is big on tech because of the global opportunity that we're seeing, work from home. So we're beginning to see that rise in local talent for tech to build apps that can be paid for local currency rather than depending on what is happening in other places across the world.
Right, and for me, anything that boosts our local currency, I'm up for that, at this point. But let's go back to this whole tariff increase issue. We know there's an international ISP, as an internet service provider, operating in Nigeria, and they've increased their tariffs by about 90-something%. But we still have the local operators here
who have been told
to hold on. Don't increase tariffs yet. Nigerians are going through a lot. Let's find other ways. But how are you seeing this move here by an international service provider able to raise tariffs?
That's what I'm saying, that the government needs to sit down with these operators, because the reason why the international guy did what he did was because of the Forex issue. At the end of the day, it's dollar value against Naira. They don't care about your currency. They care about their revenue. So if MTN, Airtel is reporting in their global currency too, it matters what they are bringing out from Nigeria. Again, the implication is that investment comes still in dollars to the country, and you don't want to bring that in and you're putting out ROI is very weak. So the government needs to, I say it's a when, not a if. They have to be allowed to increase tariffs in such a way that both parties can be happy. The consumer, the regulator, the providers itself. All the operators we have in the country, the vendors, Huawei, Ericsson, Nokia, Cisco, they all sell in dollars to these guys. So, and we are paying Naira and Kobo for our data mobile voice. So it's not one-to-one. It's not apples and oranges. Somebody is paying for that at the end of the day. And for now, it's the telco's paying. And how long that can happen, I'm not sure.
And looking at this international, ISP, at this point, this increase, 98% is quite big. I'm guessing the consumers might be shifting from that. What do you think? Or is the service that good?
It depends. The service is
it that good that you stay with a 98%?
It depends. It's a conundrum. The local guys are having quality of service issues. Month on month in Nigeria, for example, there are about 1,700 fiber cuts, impacting 500 network breaches every month in Nigeria. That is big for a business, for a bank, for an oil and gas company. That is big. We're talking about 5G, we're talking about AI, cloud computing, fintech, betting. that kind of level of petroleum per month is huge. So if somebody is offering a service that is reliable or next to reliable and you're sure it's guaranteed, you want to pay for it. That's why those guys have the initiative to do that. But locally, they cannot because there's regulation here. And for them to be able to support the kind of quality of service that we need, I mean, you're streaming...
But to operate here in Nigeria as an international service provider, you have to get the license here, right? So you're under the license? But
no, they're not the same license.
Oh.
It's not the same license.
Okay.
So there are different provisions. Yes. These ones have a different provision than the one we're talking about. Yes. So that separates them. But I get your point, and that's why the local players are neck and neck with the government about a sit down to revisit this issue. Because, again, it's a win. Because if MTN Nigeria keeps declining revenue-wise at the group level, it means they keep dropping in priority at the group level in terms of investment. You don't want to have it whereby MTN Ghana, MTN Rwanda at group level is producing more than MTN Nigeria. So when the group wants to decide where to invest into, Nigeria drops in the pecking order. And we don't want to have what happened to Etisalat happen in Nigeria, where people leave and they leave the telco locally struggling. Because we want to protect the telecom industry. Because it's a bedrock for a lot of other industries in the country. Nollywood, for example, now is almost sitting on the telecoms industry. YouTube. So content creation, YouTube, social media, WhatsApp, Facebook, Instagram. There's a lot of informal selling on Instagram and WhatsApp that is not captured in our data. Those are industries building gradually on telecoms. So if telecoms crashes, you can imagine the cascading effects across all of the industries. So we have to protect.
And, you know, looking at a country like Zimbabwe, too, you know, we're seeing the government there talking about paying their civil servants in US dollar because the ZIG, which they believed in a lot, is not, you know, living up to expectations. So it seems this currency problem is becoming an Africa thing, you know, at this point. And I'm wondering, are African governments taking currency serious? You know, enough, you know, at this point. We're seeing how it's impacting most of these companies that are operating, you know, mostly in Africa at this point. So, you know, for you, what do you think is the way forward with this currency conundrum?
We have to go back to basics, education, skill, local skill. The more you import, the more whatever happens in America impacts you. So it's just basic. If you depend on US dollar for everything, there's a reason why China and Russia are doing something together right now to eliminate that impact of US dollar for their economies. So we also have to think as Nigerians, as Africans, how we can build our economies, local content, local skills, so that we are consuming what we are producing. We are largely a consumer economy in Africa, unfortunately. And it's catching up with us now because tech is becoming, we're being sucked into tech because the world is moving. Before we were kind of immune from that. But now we're being exposed. Because if Oracle, HP, Dell, name it, Cisco, Huawei, don't sell you radios, what happens tomorrow?
So it's time.
It's time.
For Africa to produce most of these technologies.
Yes.
Always great having you on the show, Mr. Oluwole Abengu, the Research Director at Insights. Always a light having you.
Thank you. Thank you for having me, Ladi. It's a pleasure.
Thank you. All right, we'll take a break now. When we come back, we'll find out how the markets are doing at Intraday, local markets here, and most of the international markets that we track. That's in a moment. Just stay with us. Welcome back. Well, it's the first full trading week of October, and we're going to get a check on the markets now. We have Ini John McQuarrie giving us the details right there. And Ini, I know it's raining out there. It's a rainy trading day.
It's really heavy on this side of town at this time.
Yeah, it's quite
But it hasn't stopped the market.
No, it's not stopped the bulls from trying to gain control of the market. So, but it depends. This might switch before the end of trade.
I hope not. I hope not, Ladi, because, you know, last week we started, I think we started with 98 or we started with 98 last week. But in the middle of the week, we lost to the 98,000 level and we stayed on 97 to the close of, so even with intraday gains, we are still below 98,000.
Right.
And this is a market that's done more than 100. So we still have
fingers crossed if we get back above 100,000 in the shortest time.
Hopefully,
Still early days for Q4.
Yeah, so that's it. Good afternoon, everyone. Looking at the markets, we see the NGX is green, but not as green as we would have loved for it to be because we're still below the 98,000. Now, still staying in Nigeria, let's look at what's going on in other markets. One market that seems to be has always been receiving a lot of attention, still receiving a lot of attention, is the money market, the FX market. And we know that late last week, there was that circular from the Central Bank of Nigeria saying that now the CBN will implement electronic foreign exchange matching system. EFMs, FMs. I mean, let's try to understand what this is about, how it will affect, of course, the value of Naira. And Ladi was having a conversation on the telecoms industry and what FX has done, not just to Nigeria, but a lot of African countries. And so we see a lot of attention being given to that market to see how it can be best managed. Let's talk to Bosun Obembe now. He's an FX dealer, fixed income dealer at Access Bank. Hi, Bosun. Good afternoon.
Good afternoon. Thank you for having me.
Good to have you. So now we have NAFEM, we have NAFEX. Is it NFEM? Is it EFEM? Now, how do you call this one now?
At least what we have is we have the foreign exchange market. So it's all those ones just to make major. And what you mentioned last week, that was a circular from the CBN talking about the introduction of the electronic foreign exchange matching system. So the objective is to ensure openness and clarity in terms of the bidder spread. So you know the way the stock market works currently, whereby if you want to buy, you can see the offer, you can see the people, the level at which they want to buy, you can see the level at which they want to sell. So that could actually guide the rate at which you will buy. So I think that is what CBN is trying to do, and what they want to do now is to start with the interbank market, whereby currently where the banks trade on Reuters, but CBN is trying to move to Bloomberg. So you see banks will be able to quote two-way, so they will show where they are willing to buy, where they are willing to sell. So that gives a clarity as to where, if CBN wants to come to the market, where CBN can sell. I think it's going to be a good one. However, the bone of contention is still the liquidity, which has to improve. And what will bring this improvement in liquidity is the confidence which the CBN has been trying to build back from the foreign portfolio investor. Like thankfully last week we saw some flows that came in because CBN did a lot of homo auction last week. The yield was as the stop rate in terms of discount rate was about 24.3. So 24.3, that's about 32.15 or thereabout yield. So which business can somebody do and make the 2.15% return? So we saw a lot of flows from the foreign portfolio investors coming to the market to come and invest. So as a result of that, the rate started gaining last week. So we saw the rate appreciated significantly. Even today, we've seen a lot of offers at 16.15 to 16.30. So I think by the time this comes, it's going to be a good one.
Yeah, but I mean, there are some people I've spoken with who say this is just a temporal gain. You know, on the one hand, of course, we need to improve our source of FX. That's the long-term solution. But also, we see interventions from the central bank, but we do not understand the pattern. And that also seems to be bringing some kind of uncertainty into the market, which is affecting price at the end of the day. I wonder if you have heard about the impact of the uncertainty in when the central bank would or is expected to intervene in the market. All right, it does seem like we lost Bosun Obembe there. It would be good because these are some of the issues, I mean, at least top on the list, on the surface, affecting the movement of the value of the Naira. But of course, the end of the day is to produce more, have more exports so we can have more. So let's go to other markets now. I wish we could go back to the African market. We just did Nigeria. Thank you so much. So that's Egypt. Egypt's intraday, we see 0.94% in the green at 30,2017, while NSC, that's the Nairobi Stock Exchange, this is Friday's close, 108.31, also in the green. They closed in the green, 0.16%. Let's move over to other markets now and see, I think we have the Middle East, Dubai in the red at this time at 4,372. And then for Abu Dhabi, also in the red, almost 0.5% in the red. Let's see other parts of Middle East. Tadawul and Qatar are on the flip side. We see more than 1% for Tadawul, and Qatar is 0.27% in the green. I believe we have Bosun back now. Bosun, I don't know if you can hear me. Can you hear me?
Yes, I can hear you.
Okay,
yes.
Great. We lost you for a bit. Now, I just wanted to know the issue of uncertainty as to the pattern of intervention or the timing of the intervention of the central bank. Some analysts say this is also a factor that's driving the value of the Naira down one way or the other. What are your thoughts on this?
Yes, I think I share a similar view. And with this introduction of this IFM, which is the electronic matching system, in which CBN is able to see the bid and the different orders from different counterparties. So it will help CBN to know when they come into the market to intervene. So like you said, currently CBN can just look at, okay, the rate is going up, the CBN coming into the market to sell. So but the way it's going to work now, you know, the way the stock work is, so the CBN, when CBN sees, okay, there are a lot of orders, CBN will start selling, they will sell to the highest bid. So that's the way they will do the matching. So they will match you based on your rate. So I think the introduction of this matching system, it will help the intervention from CBN to help them to know when to come into the market to intervene, because they're a key player in the market.
All right, thank you so much, Bosun Bembe, for that. Hopefully, we'll see more certainty and a more steady value in the steady value in the price of the Naira at the end of the day. Thank you for your time.
Thank you for having me.
All right, so let's look at other markets now. We're from the Middle East. I think we're going to the United States now, where we see a lot of red. An impressive jobs data we saw on Friday from the United States, but seems like perhaps the effect has waned off. So we see that we are back in the red market. So stock futures slipped on Monday. The Dow Jones down almost 0.5%. S&P down 0.5%. NASDAQ more than 0.5% at intraday. We also saw separately that shares of video gaming company Nintendo climbed on the flip side, but I guess not enough to move the market. And that's after Saudi Arabia's sovereign wealth fund was reported to be considering raising its stake in the company of Nintendo over there. So still talking about the U.S., the move in the futures comes after that bumpy week for stocks and saw a major average grind in the gains. And it's the fourth winning week in a row of all averages, helped by stronger than expected jobs data. I think it was about 254,000 jobs that we're seeing created, much higher than were expected. Let's see the other markets. Also, I think that will be Asia. Nikkei looking so good, 1.80. Now at 39, had a quick movement right there. So from, I think it's about 37 now to 39, heading to 40, hopefully in a short while. Kospi also looking very green right there, as well as Hang Seng Index 1.60 is also up now. We see other markets at this time. We see Shanghai in the green, really big move right there, 8.06%, 336. And then Nifty of India is like the opposite side, is the only one in the red in that Asian market. So, Ladi, we see that the jobs data, it's good news, but it's driven some red into the U.S. market. But we see the news coming from Saudi Arabia to invest in Nintendo and all of that is driving the Asia market to the flip side, a good one for this time. But obviously, we do not know how long this good will be here. Can you imagine a market moving 8%? Big move there. Very big move.
8%. And I guess now investors are shifting focus. It's back again to inflation. Everyone wants to know what's the inflation, what's inflation look like in September, you know, now that we're entering October. And this week we're going to hear from the U.S. For their September inflation. That's for Thursday. So I'm guessing we might be expecting
and then we'll be waiting again
market
to see what the Federal Reserve will do.
Exactly.
After we've seen these great numbers from the jobs market and everything.
Big 50 basis points cut. And now we're going to also see minutes, because it's not about what the central bank does. It's about what they're planning to do, you know, going forward. That's what's going to rock market.
That's the body language, I think. That's
exactly. So we're looking forward to that. Thank you so much, for giving us those details there. But let's get a check on what's happening in Europe now. We see it's all about oil. Oil prices have dropped after posting the steepest weekly rise in over a year last week, 1 year after the Hamas attack on Israel, with concerns of oversupply, you know, countering the worries of a wider Middle East war disrupting exports in the key producing region. Join us now for more, DW correspondent Emily Leshner. Great to have you, Emily. So can we expect big price fluctuations to continue?
Hi, Lottie. Thanks for having me. Yes, we can. Big swings in prices are still likely as long as the conflict continues, though the cost dropped from the price of $8 a barrel of Brent crude last week. The expectation that Israel could strike Iranian oil infrastructure in response to an Iranian missile attack on Israel at the beginning of the month, this still looms in the background. And the impact of this regional conflict, which now involves Iran and Lebanon, affects the wider world. If a company delivering goods such as food is hit by some of these higher fuel costs, it's also likely to raise its prices, and these increased costs could then be passed on by supermarkets selling the food to the consumer. And so the cost of living goes up. The direct impact of Iran's oil production is not the only concern, though. There is also a risk that any escalation in the region could block the Strait of Hormuz, which is a relatively narrow channel through which about a third of total seaborne traded oil passes through. And it's also the path through which a fifth of LNG is transported. And, you know, that's a fuel that many countries are more dependent on since the war in Ukraine and the sanctions on Russia.
So how is OPEC prepared for this?
Well, experts say that there is a diminished impact of geopolitical events on oil supply, in part because of OPEC. OPEC has millions of barrels of spare capacity now. There's been a weakening demand in recent years, and they've actually been cutting production in order to support stable prices. And OPEC has enough spare oil to compensate for a full loss of Iranian supply, according to experts, if Israel knocks out the country's facilities. But it would struggle if Iran retaliates by hitting the installations of its neighbor in the Gulf. And during OPEC's meeting a few weeks ago on October 2nd, it kept its oil output policy unchanged. And this included a plan to start raising production from December on.
All right, what else is happening in markets today?
Well, aside from the price fluctuations in the oil market, there are three central banks in the Asia-Pacific region that are set to release their interest rate decisions this week. These are the central banks in Korea and New Zealand and India, so investors will be keeping a close eye on that. And then over in the U.S., stocks are advancing after a stronger than expected job report at the end of last week gave investors confidence around the health of the economy. And then, of course, mainland China stocks, they remain closed for the Golden Week holiday. But investors are hopeful that the recent stimulus provided by Beijing will re-spark growth after the holiday ends on Tuesday.
All right. Thank you so much, Emily, for giving us the details there and most of the happenings in the oil market in Europe. Thank you, Emily. So to other stories now, we see the government of Zimbabwe have announced that salary raises and annual bonuses for civil servants in the country will be paid in US dollars, and that's to mitigate the impact of the recent devaluation of the ZiG. According to the Minister of Public Service, Labor and Social Welfare, the move by the government is aimed to uplift lower-income employees from inflation and widespread poverty. Following its launch, the Reserve Bank of Zimbabwe has employed different financial tactics to keep the ZiG afloat, including a blitz on illegal foreign currency traders in April. Despite many attempts by the RBZ, critics believe that the bank has done very little to facilitate the smooth operation of the market. I move on to North Africa now. The Central Bank of Egypt has announced today the issuance of 2 billion Egyptian pounds worth of floating rate notes, treasury bonds. The bonds are set to mature on October 8, 2027. The interest rate on these three-year bonds will be calculated based on a formula of benchmark plus a fixed spread divided by 1 minus 20%. The bonds will pay interest quarterly with an indicative spread of 35.0553%. And the Central Bank of Kenya, data from the bank shows that foreign exchange reserves have increased in 6 consecutive weeks to $8.18 billion as the shilling is stabilizing, and we're seeing prospects of high investor confidence. This represents a 4.2 months of import cover compared to $7.5 billion, about 3.9 months of import cover reported on September 5th, 2024. Foreign investment increased during the same period as the value of Kenya, the Kenyan shilling, had to stabilize against the US dollar and other international and regional currencies in the area. And Zambia signed a landmark $50 million cooperation agreement with the Arab Bank for Economic Development in Africa to finance the construction of the Kalabo-Sikongo Angola Road project in Western Province. The agreement was signed in Riyadh, Saudi Arabia, between Zambia's Finance and National Planning Minister and the Badea President, that's Dr. Sidi Ota. The signing ceremony marks a significant step in Zambia's efforts to modernize its road network, particularly in remote areas often isolated during the rainy season. All right, let's get a check on what's happening in the crypto market now. If you look at the screen, it's mostly green on the screen with little pockets of red right there with some altcoins pulling back. But we see Bitcoin there on a tier 1.31%. Ethereum trying to get back above that $2,500 level, 0.81%. BNB, that's the native currency for the Binance Exchange, 0.8% up. So we're seeing some moves there by the bulls in the market. We've seen some buy interest. Let's look at the sentiment. How the traders feeling today? We know it was neutral and tending towards fear the last time, but it's back on smack 50 neutral. That's for the fear greed index. For traders, trying to find entry and exit into the market, that's your sentiment right there in the market. It's neutral. Let's look at the top cryptocurrencies that we track. We see Bitcoin there holding up 1.31%. For the top cryptocurrency we track there, Cardano, 35 cents, up 1.69%. XRP, we've seen XRP on the SEC there. That's majorly in the news right now, but still holding up at 53 cents. Is it a security or not? For now, it's not a security. That's according to the U.S. Securities and Exchange Commission, but we still have that ongoing court case there between XRP and the SEC. Let's get some top headlines now. We see recent revelation there by the owner, the CEO of Telegram. That's after he was arrested. That's Pavel Durov. It was reported he hinted that the platform is not that free from surveillance. From what he said last time. We say it's not that much of a safe tool, for criminals, as some had assumed. He confirmed that Telegram's process for disclosing IP addresses, when legally requested, had been in place since 2018. So your IP can be traced with Telegram. That's what he's saying. Now we're seeing crypto sponsorship in the English Premier League. Crypto firms have spent a record amount of about £130 million on deals for the Premier League season 2024-2025, and that's according to sports sponsorship agency, that's SportQuick. So we're seeing a lot of crypto ads there in the EPL. The United Arab Emirates, they've made crypto transactions and conversions VAT-free with amendments to its value-added tax regulations. The change is to take effect from January 2018 and solidifies the UAE's position as a leading crypto hub. So those are the top stories there in the crypto market. Let's bring in Gilbert Jopata, our financial market analyst. Hello, Gilbert.
Yeah, greetings, Mr. Ladi. Great to be here.
Yeah, it's great to have you. So, yeah, we're seeing VAT-free cryptocurrency transactions in the UAE. What potential advantages does this tax reform offer to, crypto investors and, mostly businesses in the UAE?
Okay, first of all, I think the tax reform, which is eliminating taxes in crypto, is a significant shift for the United Arab Emirates and also for the cryptocurrency industry at large, because it offers significant benefits to businesses, which I think one includes increase of profit margin. Another is tax reclaim. So businesses in the United Arab Emirates that have been running since 2018 can actually apply for a reclaim of taxes that they have paid. And this is going to encourage business growth and also the growth of innovation, attract more global investors and also talent. But then a tax-free environment typically always reduces compliance costs. So this is also great news for businesses there. It will also boost liquidity and I think more than anything boost position the United Arab Emirates as a favorite destination for crypto companies. We've had where Seychelles was the favorite destination, at some point Malta. And now we are having the United Arab Emirates making a more friendly environment and encouraging more of a migration of crypto businesses into their country. And then when we look at the assets they are dealing with, we're looking at Bitcoin that has a fixed total supply. About 94% of the supply is already gone, 6% that is left. And it's going to be mined within the next 116 years. And then the minimum Bitcoin that comes into circulation daily is about 450. Governments around the world buy an approximately 550 a day. So this is a wake-up call for countries, entrepreneurs, investors, to wake up and understand that this is one of the greatest assets of our lifetime. And I think the United Arab Emirates understands this. I expect other countries to follow suit, just like former President Donald Trump have said a lot of great things he's going to do and position America more like the hub for crypto. But so far, we see the United Arab Emirates, leading in this. But then they may be the first, but I still believe that we will still have other countries follow suit.
Right, and definitely exempting most of these crypto transactions from VAT. That means the government is going to be missing out on that revenue. Is it that the government there in the UAE, they're too rich at this point? What are the benefits to the government?
Okay, typically this is going to boost foreign and direct investment, in the United Arab Emirates, while positioning them as more like the global hub for crypto in the world. Also, more of economic diversification. I think this is going to reduce their reliance on oil, and position more how they could take advantage of the fintech, crypto in this case. And then, of course, job creation. The establishment of more crypto businesses in the country is going to further stimulate the economy, increase also the consumption of domestic spending. And the other way around, United Arab Emirates is a major country that makes revenue through tourism. So the fact that we are going to have heavy migration of crypto businesses there, major events and conferences around the world will be held there. There's going to be increased consumption and domestic spending. So the United Arab Emirates has a lot more to gain from making policies that will rather encourage a migration of crypto businesses and capitalists from other countries to theirs.
Does it put the UAE at more risk now when you see most of these crypto businesses moving shop there? And what about the bad actors? Do you think they're able to handle most of the bad actors in the crypto industry?
Okay, one thing is that the United Arab Emirates is one country that has been able to make a very clear regulatory framework, not just that it covers, it's just like, other countries we see where the commodity market, they are in and claiming rights to regulate the market. We also have the Security Exchange Commission, who is also claiming rights to regulate the market. But the United Arab Emirates is one country that have been able to bring out a framework directly for the cryptocurrency market. So regulators are always in the marketplace to protect investors from bad actors. At the same time, there's another way to do it anyway, because I believe that the more regulated the marketplace is, the more it increases access to invest in from most retail investors is always made available for accredited investors. But then the United Arab Emirates has a framework that is there to guide and regulate the cryptocurrency industry over there. So yes, the eyes of the law and the regulators are in the market. So I think that having a more robust regulatory framework like theirs, it's there to actually hunt on bad actors who want to play in their country.
Right. I guess it's time to look back to September now. Most of the central bankers are going to be expecting inflation numbers, and for Thursday, we know the U.S. is actually CPI day, in the U.S. So do we expect volatility, and do you think this CPI data might not be what investors are expecting? That's for September. Do you think we might see an uptick there in inflation in the U.S.?
Okay. The United States of America have had inflation as high as about 9%. And has pushed it to as low as the last one we saw, which was 2.5%. And then the last PC data, which to the Fed is their favorite gauge for inflation, not even the CPI, came out at about 2.2%, which is the lowest we have seen since February 2021. And then we've had rate cuts that happened. We just had a rate cut. And then we had a job number which came out strong. A job number that came out that strong it's something that is quite encouraging. So I expect, the job number is about 254,000 new jobs. That's a whooping number of jobs added into the economy. So with the job number that we had, I'm expecting that we are supposed to have more of a slowdown in numbers of inflation numbers following such strong job reports. And then so I think it's going to bring some volatility, more of a positive one, because I believe that the number that will come will be lower and not higher to enforce or reaffirm that we are going to see a rate cut by next month following the FOMC meeting. But then the job number that we had suggests that we may not see a massive rate cut just like we may expect. So there are more possibility of us seeing a 25 basis point from next month's rate cut. But then I think that we are supposed to have a positive inflation numbers coming out on Thursday. And then the market is well positioned to, reflect this. Bitcoin, even though we started on a bullish note, I think that we have very key areas that we should watch out for. First of all, is the 60K, 61K. But many persons were expecting it to break, during this drawdown that we had. But the reason we did not have that is because after the last rate cut, it led to a lot of buyers entering in, and then they have a position that has been able to hold that 60, 61K. So why there is a question of, will we retest that? And then if we do, will it break? We still have 65, 67K. That still happens to be another major resistance. So these are zones we should watch out for. For us to be able to break that 65, 67K, I believe that we should have more of what technically is called the bullish ascending triangle. If we have that, then we'll be able to break. But then I think the market is well positioned to give us some volatility after the release of Thursday's CPI number, because it's going to inform and reaffirm what we will price in at about next month rate cuts.
Right. I know investors will also be looking out for what was said at the last FOMC meeting. Do you think, we're still going to see forward guidance that's going to show that the Fed is ready to stay dovish, when it comes to increasing interest rates?
Honestly, what I think is that the Feds want to start to increase monetary policy. This is what they want to do. If you look at, when we go for FOMC meeting, what we try to look out is clues. So we're looking at the face of Jerome Powell. We're also looking out for some numbers. It's like a poker game where you're looking at the face and you're looking for clues. And so far, the kind of clues that we are having shows that the Fed wants to start having more of a push towards the dovish stance, so it will lead into increase of monetary policy. And so I think that, yes, next month's FOMC meeting will still give us more of a dovish stance. And then you know, the more that stimulates more currency into the marketplace, at the end of the day, it's still going to end up in the marketplace because institutional investors and traders will have access to more of these loans. They will have access to this money as loans at a very low interest rate, which will end up stimulates the marketplace. So I think debt, the debt market is about to have volume flow from the debt market back into the stock market and then crypto at large. So I think it's right for me to say we should be expecting risk on money in the marketplace. And if you look at the policy, if you look at the decision, if you look at the how aggressive the last rate cut was, you should understand that I think we are moving into a more dovish policy and trajectory right now.
Right, and I'm sure investors, you know, might be excited thinking that, the central bankers are moving into a rate cutting cycle, so everything should be good. But, you know, we still have, tension in the Middle East, and we know how geopolitics, impacts risk assets. So is it time to just, pack up, for most of these risk assets, expecting, this tension might not de-escalate? And I was talking about the Middle East.
Okay, I think that the market will always correct hourly, the market will correct daily, the market will correct on a weekly, the market will always correct even on the monthly. But then if volatility is going to be your problem, then I don't think that such investors should be investing in such marketplace, because the market will correct. But then should you allow short-term drawdown either to the upside or downside affect your long-term position? As a trader, as traders, short-term volatility shouldn't be your problem, because if you have confirmed that the trend is going to the upside because of the war, you go long. If you believe that it will go to the downside, you short the market. But for investors who understand seasonality, understand timing, understand market cycle, you understand that the cryptocurrency market is moving into a new cycle.
Right.
Just like also the dollar also has reached the peak of its bull market. The dollar was in the bull market during the aggressive rate hike, but then it has reached its peak. So the cycle is reverting, and now while the dollar is losing, that aggressive hike it was having, we are rather seeing the cryptocurrency market positioning itself move for an upside move. So investors should not worry over some short-term volatility that may come from the war.
Right.
We should be positioned more for the long-term trajectory of the market.
Right, I do keep saying it. It's definitely not an easy time to be an investor in most of this risk asset. But thank you so much, Gilbert Okpata. It was great having your perspective again today. Thank you.
Yeah. Thanks for having me.
All right, that's the show today. Those are how most of the major markets we track are looking. You can watch us again on our YouTube channel. You can also continue the conversation on X. Just search for Channels Television. I'm Ladi Williams. Thank you so much for watching. Bye-bye.